Good morning, everyone.
Good morning.
I'm your moderator today. Chimwemwe Nyirenda is my name.
Okay.
Hi, Derek.
Hi, Chimwemwe, how are you?
Good, thanks. Hi, Patricia. Good to see you
Hello,
again.
good morning. Good to see you.
Morning. Morning, Helen. How are you?
Morning, good, thank you.
Good. We're all looking good today. And thanks, ladies, for joining us. You're the first ladies on the panel in the last 3 editions of the Meet the Farmers webinars.
That's great to hear.
That's interesting to know. What happened in the past?
I don't know if I don't know what was going on, but it's very refreshing to have you guys on.
Thank you.
Thanks.
All right. Is it still just us? Waiting for? Okay, so we're just waiting for Dr. Kayula, I believe. Are people on? Okay. Sorry. Come down. That's fine. Hello, everyone, and welcome to today's webinar, Agriculture Finance in Zambia. Thank you for taking time out to be with us today. We're here to assess key opportunities as well as constraints in financing farmers. My name is Chimwemwe Nyirenda, and I'm your host today. As we wait for one more of our speakers, I would like to do some housekeeping and maybe introduce you to Meet the Farmers Virtual Summit. I'll introduce myself first in more detail. I've been doing business events in Zambia for local and international conferences and exhibitions. From Luapula to Livingstone, from AGOA to UNWTO, as well as Luapula Expo recently, all in person. But today you cannot tell whether I'm in Luapula or in Lusaka, thanks to technology. This technology and acceptance has been accelerated by the global pandemic. Because keeping safe has to be our #1 priority, we have to adjust and find other means of interacting, networking, doing business, and keeping the agriculture discussions alive. We have to adjust to the new normal. Speaking of adjusting, I'm also the co-project director for Meet the Farmers Virtual Summit taking place end of this month from the 25th to the 27th of August. My other director is Liane Singh. She's also CEO of Image Promotions. BC, and I mean before COVID, we were fierce competitors. but today we share the same secretariat, working together and sharing ideas on how to successfully deliver Meet the Farmers Virtual Summit. Who would have thought? Personally, for me, that's the biggest lesson so far from the pandemic, learning to value each other more than ever before, no matter how small and no matter how big the next person is. But from this pandemic, we also learn how to value our neighbors, our own Zambian products, services, and people. And with regards to today's discussion, our own very small and emerging farmers. Once again, I would like to thank you for taking time out and being here today. So let's get right into it. I'll start by introducing my panel of experts for our topic of discussion, agriculture finance in Zambia. We have ladies today for the first time, and I'm going to introduce them first. From NatSave, we have Patricia Luhanga, who is the PR manager. From CEEC, we have Helen Masia, who is operations manager. From the World Food Program, we have Derek Dimboa, the program policy officer. Under a project that is financed by the Government Republic of Zambia, as well as International Fund for Agricultural Development, IFAD, we have Mr. Michael Mbulo from RUFEP. Ladies and gentlemen, please welcome.
Thank you.
Thank you.
Thank you.
Later on, we will be joined by Dr. Frank Kayula, CEO of K-Pro Research Institute. To all our audience, I would like you to pay attention to the bottom of your screen where there is Ask a Question feature. It is on the bottom right hand of your screen. So if you have any questions, just pop them in there. And if you do miss anything, don't worry. We'll be sending around the link to the recording soon after the webinar. During the webinar as well, we'll be popping up, we'll be asking you on pop-up questions anyway, and we encourage you to participate to give us an indication of your mood, of what you think about the sector, and in particular, what we're talking about. I'll introduce today's topic, agriculture finance in Zambia. As I do this, I'm going to ask Patricia Luhanga to start making preparations for her presentation, which is going to be the first amongst our speakers. So agriculture, a very critical sector in the Zambian economy. But has it sufficiently supported poverty reduction in rural areas? The agricultural sector employs 48% of the working population, but should it be contributing as little as it is to the country's GDP? Below 5%. Agriculture finance presents a picture of contrast. The share of the agriculture sector's GDP financed by the banking sector is amongst the highest in Africa. However, 4 out of 5 of the institution credit goes to the relatively small number of large commercial farms, while less than 5% and medium-scale farms have institutional credit. My panel of financial and agricultural experts will help me analyze and highlight opportunities in the sector and draw attention to some of these imbalances. First amongst our speakers, as mentioned before, is Patricia Luhanga, who is the PR manager at NatSave. Patricia, welcome. And thank you very much for coming through.
Thank you so much.
Patricia, the stage is yours. You may proceed.
Okay, if the technical team can help me with the slides so that we can talk through them. And as we're waiting for the slides to be shown, just a quick introduction of who we are as NatSave. So we're 100% owned by Government of the Republic of Zambia. And we've got a very rich history because we trace our roots to way back in the 1890s when we were operating as a post-savings bank. And at the end of the day, we started providing financial solutions in 1926. So later on in 1972, we were established as NatSave under an act of parliament, and we were mandated to undertake banking and financial services to the population of Zambia. So if I can go to the slide, help me with the slide that is showing the areas where we are. So NatSave basically has presence across the country. We are in all the 10 provinces of Zambia, and we've got about 43 points of representation, which include what we call the money windows. We also have about 96 ATMs, the point of sale machines, and we also serve our customers via mobile and internet banking. And in total, we've got about 300 accounts across the board. So now I'm taking your attention to 14 of the branches where we are the only service provider in terms of finance. And these are mostly the rural areas that include points such as Zambezi, Chavuma, and Chilubi Island. So let's move to the next slide where we are introducing our values. So corporate values, the mission and the vision as stated there. Our vision is delivering financial inclusion. Our values include innovation, trustworthiness, accountability, and inclusiveness. If we move to the next slide, please. Our strategic intent obviously is to move from being an institution that provides basic banking products and in turn provide a digital social enterprise that provides inclusive financial services to everyone across our network. So we want to give a perspective of our understanding of agriculture financing before we even look at the financing models. So in the past, I think most of us do remember that there once existed institutions such as Lima Bank and others that include, I think, Agriculture Finance Corporation, which were solely dedicated to financing agriculture. And other government departments obviously came in to provide other services such as supply control issues and so on and so forth. So in the early 90s, we see the privatization and liberalization of the economy happening. And that sort of changed the approach towards financing in agriculture. And when that happened, it obviously left a gap in terms of financing agriculture. Now, like Chimwemwe said in his introduction, we realize that agriculture plays a very important role in the economy of Zambia. And we get to see that much of the population of the country, which is like 60%, is in rural areas. And taking you back to where we operate as NatSave, we are in the rural areas where these things, where the agriculture activities are taking place. So the country has also been preaching diversification, and the diversification program itself is mostly skewed towards agriculture. And what we are saying as NatSave is that for us to contribute to the growth of the GDP of this country, from what Chimwemwe earlier on said, just about below 5%, we need to structure our programs and all our projects across the various issues that support agriculture in the country. And in so doing, our focus is again on creating an enabling environment for the agriculture sector, especially those in rural areas, to access financing. And what we have done is we've created partnerships with government, the MSMEs. We've also looked at leveraging on the youth dividend as well as women for us to be able to support them accordingly. And we've got quite a number of products and services that speak to the agriculture sector. And these include provision of loans, and these loans are done in such a manner that we can finance assets or we can give capital to the farmer. And we also give lines of credit for those that would like to purchase anything. And there are quite other issues that we look at that might qualify in terms of credit financing. So getting to our financing model, we get to give you our approach to this. So if a farmer comes to us and they want to access a loan or input, so NATSEV will provide the farmer with that loan. It might be capital or it might be the input. And when we are introducing inputs or any form of mechanization, we've also identified partners who are agro dealers, and a farmer will just get an LPO, take it to the agro dealer and be able to access whatever farming inputs they need. The other way we do this is by obviously engaging off-takers, and these buy the equipment on behalf of the bank and they give them to the farmer. And then when that cycle is going, so you get to see that the farmer gets the money, or they get the inputs, they do their agricultural processes, and at the end of the day, they have to give back the money to the bank. So if we can move to the next slide, please. So that is just the financing model in detail, where we are giving you the appraisal process. And even as we speak, so we are not running away from the fact that when a farmer applies for a loan from NATSEV, there's an appraisal process that takes place for us to be able to establish your creditworthiness. And if at all, we are also looking at the risks, how much of these risks sit with us as NATSEV, and how much of these risks sit with the farmer. So we can move to the next slide. So deliberately as NATSEV, we've taken up initiatives where we've put agriculture as a key sector in our strategic plan. And why we have done this is obviously to feed into the government agenda, and more especially when we talk about the 7th National Development Plan. So if we've got to make contributions that give us much leverage in increasing the GDP, this is one of the areas that needs to be done with. And we're also developing innovative products and addressing all customer-related issues for us to be able to move forward. We also realize that capacity development is very critical on both our end as a bank, as well as the beneficiaries, if we've got to move and provide what is needed in terms of agriculture financing. Next slide. Okay, so we're just highlighting some of the benefits that come with our financing. So there are a number of stakeholders involved. You've got the farmer, you've got the government, you've got NATSEV, and you've got the MSMEs. And what we speak to is that I think for farmers, we want to see as much mechanization as possible, which eventually is going to increase, obviously, the yield, and also improve the inputs, increase income, and so on and so forth. So if we can skip the next slide and go into, let's skip that. It's talking to the benefits of mechanization. Let's skip that one. We've already addressed that. Okay, so the issues have been identified in terms of how then we deliver. And interestingly, I'll speak to 4 critical ones, which the first one is the interest rates. So whenever you're discussing financing, the issue is that you still hear that interest rates are very high. And as NATSEV, what we are recommending is that agriculture-related credit should be affordable. And also, if we can get government to provide cheap funds to subsidize the loans, then it really would work better for us. The other issue that we have identified are the climate shocks. So we've really been going through the climate change, where we've experienced droughts and sometimes too much rains that hinder the progression in terms of agriculture. And the issue that kicks in is insurance. So if we can tie our products and services, including loans to insurance to enable the farmers to be able to, that's just to cushion the impact of the climate shocks, then this will work better for us. The other issue that we've also identified is the value chain financing. There is need to develop capacity. And as we establish long relationships with quite a number of stakeholders in the value chain, we hope that some of these issues will be able to be dealt away with. And the other controversial but very critical issue relates to collateral. Some of the farmers do not really have the much needed collateral to access the finances. But then what we would like to see is the portfolio guarantee approach for us to be able to establish those partnerships that include small-scale farmers to come together and have that done. Let me have the next slide. Okay, so we're just showing you where we've been as NADSEF, showing the support that we've given to farmers in terms of equipment, as well as the farming. We can move to the next slide. Okay, that's also inclusive. We said we're 100% government owned. You can see His Excellency, the President of the Republic of Zambia there, handing over a tractor. Now, the current market trends and developments is that we are sitting in the COVID era. A study which was done by Impact Capital Africa on Zambian businesses indicates that about 87% of businesses in Zambia have been negatively impacted by COVID. And actually without support, 48% of these businesses are at risk of failure within the next 12 days. And when this happens, it will obviously put thousands of jobs on the line. So what companies are doing now is that they're prioritizing protection of cash and liquidity. And across the board, access to affordable finance is seen as vital to recovery. Now, we've looked at the winners and losers in this COVID issue. And thankfully, agriculture is sitting on the winning side. And this is one thing that we as NADSEF are capitalizing on to ensure that we support this sector. So if we can move to the next slide. So in closing, we are well positioned as NADSEF to support the economic activities in Zambia, and particularly that of agriculture. We've set aside some internal resources to support the agri sector. We're also applying to the Bank of Zambia to access that estimate of our resources will be allocated to the agriculture sector, and then the rest of the sectors will be able to share the rest of what we'll have. So we've positioned ourselves in such a way that we continuously need to support the agri sector, and especially those small-scale farmers who are in areas where we are operating. Thank you.
Thank you very much, Patricia. We'll be posing more questions towards you from the audience with regards to what you mentioned last, participating in the empowerment of small-scale farmers. A lot of questions surrounding that. I would also like to take this opportunity to welcome Dr. Frank Kayula. Dr. Kayula, welcome. Dr. Kayula, you may have to unmute yourself so that we can hear you.
Okay, thank you so much, Mwemwe. I'm glad to be on this platform today.
The most important thing is to show up late, but you're here. Thank you very much. Our next speaker is going to be Mr. Derek Dimboa, who is an agricultural economist and currently Program Policy Officer at the World Food Program Zambia Country Office. Under the smallholder will primary focus on financial inclusion for low-income population farmers inclusive. Mr. Dimboa, welcome, and please go ahead.
Thank you, Chimwemwe. Nice to meet you after a long time, this time virtually. I would ask as well for help in uploading my presentation, my short presentation. Over. I would like assistance in uploading the presentation from your end.
Okay, we don't seem to be having your presentation. Could you kindly read? And whilst you do that, would like to invite Helen Masia from CEEC to make her presentation, which is on hand. I'll ask the technical team to just put up your presentation, and whilst we're doing that, you may introduce yourself and your organization.
Okay, thank you very much. My name is Helen Masia Mwanza. I'm Operations Manager at the Citizens Economic Empowerment Commission. And we are happy to be given this opportunity to speak to the topic at hand today, because as a commission, we do have particular priority and interest in this topic. I can see my presentation is ready. So in speaking to this topic today, financing the agricultural sector, we will speak to it from the perspective of CEEC and what we have been able to do in the sector. Next slide, please. So as my colleague from NatSave mentioned, we have also noticed the gaps in financing in the agriculture sector, obviously arising from the many factors such as the collapse of banks that were particularly responsible for providing finance to the agriculture sector, such as Lima Bank. And in line with this, we did come up with what we are calling the Value Chain Development Program. This is a district value chain development program which aims to cover all the districts in Zambia. And this is largely an agricultural value chain development program. We have been running this program since 2013. As you can see from the screen there, we came up with a resource map. This resource map helped us to identify what is the natural resource endowment in each district in Zambia, and how can we add value, because we believe that value addition is the way in which we will raise the profile of the agriculture sector in Zambia and contribute to the much needed GDP that our host spoke to earlier. So as you can see there, we came up with at least 5 natural resource endowments in each district, and our aim is to be able to support these value chains in each district. Next slide, please. In terms of our focus, guiding principles, our guiding principles are that we focus on priority sectors, the agriculture sector being one of them. We want to support industrialization and economic diversification in line with the government aspirations in the 7th National Development Plan, as well as in policy documents such as the Job Creation and Industrialization Strategy. We also want to uphold geographic, social, and gender equity. I think my colleague from NatSave also spoke about the fact that rural areas are highly impacted, because here we tend to see not a lot of development happening there. Then we also have women and youth, who are usually the marginalized groups, and this is something that we hope to redress. Next slide. So in terms of where we are, some of the value chains that we have supported, we have the mango value chain, we have the soya beans, we have groundnuts, we have cotton, dairy, rice, aquaculture, pineapple, honey, cassava, palm oil, and cashew. And so far, we have supported 66 districts. Out of the entire Citizens Economic Empowerment Fund, we have over 350 million kwacha, which we've disbursed to various small and medium enterprises, and over 3,590 of these. Now, when we look at these figures, over 80% of these have gone to the agricultural value chain through the District Value Chain Development Program. So in terms of funding, we do a call for proposals. When we have some funding available, we do a call for proposals calling for citizens in the various districts to apply in a particular value chain. And we have noted some of the challenges, especially in funding the rural areas. So we have tried to come up with packages that actually speak to that are more inclusive in terms of financing. Here we have things like a 50% collateral cover. So for example, if we're going into a rural area, someone is applying for 100,000 kwacha, we'll not ask them for collateral value worth 100,000 kwacha, we'll ask for collateral value worth 50,000 kwacha, just to ensure that we're being a bit more inclusive. We also have a few microfinance packages where up to 50,000 kwacha will not ask for collateral. So those are some of the measures that we put in just to try and ensure that we're being as inclusive as possible, and people in the rural areas can have this access to financing, which is usually elusive for the agriculture sector. So as they say, seeing is believing. My next few slides, I just want to show you some of the value chains that we have actually supported. In Western Province, we have supported the mango value chain, among other value chains. We have their Adastra fruit processing. They are processing mango fruit juice based in Mongu. Next slide. In Central Province, we have funded Mumba Farmers Ginning and Pressing Company. This one is quite an important company for us, because for the first time, we have an indigenously owned ginning and pressing company, which also has participation of the farmers through the Mumba District Farmers Association. So the farmers are also part of the ginnery. So we've invested there over 12 million kwacha, and they're in the business of ginning cotton. In Northwestern Province, we have supported a company called Premier Cornstarch Company. This is in the cassava value chain. This is a company that is based in Kalumbila. Here, we're trying to take advantage of the fact that we can add value to cassava. This is a plant that will be commissioned sometime next month. It has a capacity of about 26,000 tons. So we are very excited about this, because we know that a large number of farmers in the Kalumbila, Mshindamo, Solwezi, and surrounding areas will have an opportunity to be able to supply cassava to this factory and be able to make starch out of the cassava. Next slide. We also have smaller ones in Northern Province, which is Chivusa Enterprises in Mongwi. They are making peanut butter. So again, this we supported here, the groundnut value chain. Here we are also showing you that in terms of geographic distribution, we have gone right into the rural areas. Now, in terms of the opportunities that we see, firstly, at a local level, as I said before, through that map, if you can just take us back to that map which we showed earlier. If we take a look at that map, we can see that Zambia does have opportunities to add value to agricultural produce through these priority industries we have been able to identify. So if we just take, for example, Muchinga Province. In Muchinga Province, we identified stock feed as one of the areas to add value to. We identified groundnuts, we identified beef. So these are some of the value chains that we are funding currently, where we see opportunities for value addition. Here we are also saying that at a continental level, at a regional level, we have things such as the Africa Free Continental Trade Area, which Zambia has recently signed up to. Currently, trade between African countries, we're looking at $8 billion. We're also looking at a population of 1.2 billion people in Africa. So these factors are all opportunities for financing institutions such as CEEC, such as NatSave, to be able to take advantage of the opportunities that are existing for funding agricultural based SMEs. We're also going to look at some of the challenges. We have seen that the COVID-19 has brought significant pressure on SMEs, especially in the agricultural value chains. We have seen restriction of goods, we have seen restriction of movement of people. So this really has affected the agriculture sector in terms of input for raw materials, in terms of goods required for processing in their factories. We have seen that this really will affect livelihoods, and this might lead to increased rural poverty. We also acknowledge the fact that a lot of industries are downsizing. So these factors really will affect the agriculture sector. And we expect also on our part, for example, as CEC, we're going to see a reduced, a negative impact in terms of the loan recoveries that we're going to be seeing in this area. But we do hope also that this will give an opportunity for us now to look at our systems, to look at the marketing systems, because the COVID, as we have seen, has really exposed systemic vulnerabilities. Here we're looking at the market infrastructure, we're looking at the supply chain vulnerabilities, we're looking at our actual business models, we're looking at things like buffer stocks. How can we make these more resilient so that in future we're able to deal with pandemics such as the COVID-19 and are able to ensure that our SMEs that we're supporting are more resilient in this aspect. And we also see the need to be able to protect more vulnerable groups, like we mentioned, such as the women and the youth. As a commission, we have a deliberate policy, 30% of our funding goes to youth, to women, 40% goes to youth. So these are areas in which we'll be paying particular attention. Currently, we have submitted the COVID-19 resilience strategy to government, and we are hoping that we'll be given the necessary financing to be able to assist businesses so that we don't have this negative impact on the SMEs that are actually in the agriculture sector. Thank you.
Thank you very much, Helen. And Patricia Luhanga, I had given the ladies a bit more time because we haven't had ladies. So gentlemen, you are going to have to stick to your 8 minutes so that we're going to have enough time for questions and answers. There are a lot of questions coming through at Patricia and at Helen because you've just presented. Please go down to your Q&A so that you can actually directly answer the audience that are asking you these questions. So maybe at the end, our questions will be much less. Mr. Dimboa, we have your presentation now. I'll ask you to keep it within 8 minutes.
Well noted, Mwemwe. So thank you very much. We could move to the next slides quickly. So we could move to the next slide so that I get to the gist of the presentation. Yeah, I'll start quickly by unpacking what we think as WFP in our quest to support government systems develop a more sustainable agriculture systems. And as WFP, we are supporting the government, in particular 2 ministries, Ministry of Livestock and Ministry of Agriculture, in unpacking what we may think as enablers of enabling agricultural development. And we are championing one key principle of unpacking the value chain approach. If we have to look at financial services in its sense, and in its holistic sense, we need to look at it from production to transformation, and lastly, ending with consumption. So in terms of championing agricultural finance, we think one of the key ingredients is to ensure that these farmers, be it small scale farmers, medium scale farmers, or the large scale farmers in essence, support and promote good agricultural practices. And by so, we are promoting from the onset that we take into consideration the changing climatical conditions. And from the beginning, you'll see from the slide on the screen that we're moving from the field, looking at key enablers, which is from the start, these farmers should have access to input credit. And from the beginning, I think for a long time in the country, we've been battling with issues of how do we segment these farmers. We should start from the basis of organizing these farmers in good savings groups from the onset. And this should be the basis of them growing in their quest to access financial services. And lastly, as they do their production, we're looking at issues to do with weather index or agricultural insurance in essence. This is important because we need to ensure that the investment from the onset is protected. And I'm happy our colleague from MTF did mention very key enablers from their end for farmers to access these services. So we need to ensure that before farmers can even access credit from CEC or NatSave, they're already trained from the basis of lending to each other. So these farming communities, be it cooperatives or farming groups, need first to start saving themselves and lending to each other. And if they have to access credit, we need to ensure that they've got access to basic protection, which is agricultural finance. When we move to the next point, these are issues to do with farmers ensuring that they have access to post-harvest production. And by there, we need to ensure that farmers have access to loans and facilities that protect their harvest. And when we move to what is very important is for finance to be meaningful, farmers need to have access to market aggregation. And through this, we want to promote certain aggregation financing options, which I'll explain in the next slides. But lastly, we need to ensure that there's finance on processing. I'm happy that CEC has gone a step ahead by looking at processing loans, which is very important. So we could move to the next slide. Yes, and before we even think of financing farmers and our interest as WFP in the support of government is to ensure that we should understand the rural economy. The rural economy is very much different from the urban economy, as we put it, because you need to understand the people who are saving. Only when we understand the people who are saving, that's when we're going to understand what products we need to design. And I'm happy we have on our panel some of the biggest pioneers of understanding the rural economy, and that's RUFEP. And because we need to unpack products that speak to the rural populace, we need to understand who these people are, what their demographics are, how do they respond to certain products. We don't need to take any product from anywhere without studying these people. And that's the importance of understanding. Do we really understand the rural economy we're working in? We could move to the next slide. Yes, and I'm happy we are coming to an holistic and the gist of my presentation. We need to understand the key things around this. We need to understand the drivers. We need to understand the policy environment and also the current policies that are around. And I'll start from the base. You will notice that for us to offer meaningful finance to our small scale farmers, we need to ensure that from the onset, these farmers are nicely organized in groups. The groups must be defined from the beginning. These groups must be, like I said, they must be able to interact. There must be social cohesion. It's very expensive for a bank like NatSave or our colleagues from CEC to reach out to these farmers who are situated most times in rural Zambia, which it takes a lot of time to reach there and a lot of resources. So the moment these farmers are organized in village savings group or farmer clubs that are well defined, it's easy for companies like NatSave, companies and institutions like CEC to offer access to credit. And also, you would see from the base of my presentation that we have got these farmers that were saying they should be able to aggregate together. So in harmony, they're able to receive agronomic information together. They're able to venture into a value chain. There are different value chains of choice. It might be a legume value chain. It might be a cereal value chain. It might be any other value chain. But what we're looking at is from the onset, if we need to unpack and enable that farmers have got access to agricultural finance, we need to ensure that they're already organized. And as they're organized, the end product of it is this produce of our small scale farmers to land into some processing plant. or to be processed into an end product. And that's why you see that from the input part of it, we need to ensure that all these services we are pushing, we have got input suppliers in place. We should have our lovely seed companies that have done a lot of work in the past 10 years. We're now seeing more and more farmers adopting hybrid products, which is translating into higher yields. But for that to be meaningful, for us to offer loans to these farmers, we need to ensure that these farmers get quality seed, they get quality inputs. And as they do that, we also need to start informing what markets they need to sell in. So you understand that from the onset, we'll be talking about rural aggregation, because NatSev and CEC would like these farmers to repay. And they could only repay when we guarantee a robust market, which is predictable. And this can start only if we organize these farmers into very organized groups. So from the farmer organization, they'll move to what we call aggregation hubs, where farmers now congregate and have defined structures at village level or at camp level, to put it that way. And these farmers are able now to aggregate, and they are forming what we call economic of scales from the base. And they're able to interact now with what we call as a intermediate aggregator, who may be at district level. So if we're talking about a product like, say, soybeans, the farmers will aggregate starting from the village level to camp level, and you'd have 6,000-7,000 farmers aggregating soybeans at a district level. And they'll be able to interface with companies like Mount Meru, like Seba Foods, who have interest to pick up that. But all that needs to be informed by way of organized structures. So we're seeing that along this way, if you look to the far right of the presentation, you will notice that there are certain things we need to support the government and everyone involved in policy making. There are things like the rural finance policy, which I'm happy that our colleagues like RUFEP have been championing, and this is coming up very well. We need to constantly review these policies to speak to current happenings. We're also happy that we need to look at things to do with financial inclusion. What are we looking at? What things do we need to look at going forward? Those are things we need to invest in. So we can move to the next slide.
Just wrap it up, Mr. Dimboa. We're over 8.
Okay. And one key thing is we need to look at, we are moving through a digital platform, age now, like you have seen. So we need to promote things that bring about inclusion of these farmers, linking of these farmers to different products. Also, we need to look at digitalization of these traditional savings platforms. And one key thing that we need to look at as we talk about agricultural finance is financial inclusion. Where do we move from now? So Chimemo could move to the next slide, that I could wind it up. So one of the best things that we need to look at going forward as partners, there are different partners in this space. We have NGOs, we have developmental partners, we've got the UN system, we've got NGOs and other partners and banks, name it. We need to start understanding the features and benefits of the rural agricultural product. Without that, we won't be able to make it. We also need to start introducing traditional saving methodologies to farmers and producers. From the base, we have had a history of strong agricultural banks going down in Zambia, and we need to address a cultural issue that when we borrow, we need to retain as the citizen of the country. Also, we need to start introducing certain enablers that will protect production. This is talking about risk transfer to protect the farmers' produce. And one key thing we need to look at, which is very important, is the support of the extension staff. We can analyze the budgetary allocation to agriculture as a safe, but we need to increase the support to extension staff. Only when this happens, will we now start talking about a meaningful outcome. And also, a partnership is very, very important, and I'm happy most of the panelists here in the RUFEP, CEC are pushing that agenda. And one key thing that we need to continuously do is unpack our products. And it's an appeal to financial institutions that provide these services that increasingly we need to get more simplified in the products so that people understand the different steps. You will notice that even on the panelists, there are a lot of questions to ask to do with what is the interest rate, but it's not about interest rate, it's about the whole package. How do you handle the product from beginning to the end? And lastly, as I wind up, we need to look at key things in innovation. We don't need to do the same thing over and over, 2-3 years doing the same thing. We need to be innovative of how we deliver our products to our small scale farmers. Thank you very much, Chimwemwe. Though you have made me rush, that's our presentation from WFP. Over.
No, thank you very much, Mr. Dimboa. I'm sure you'll still be able to share your insight during the Q&A at the end. I would like to introduce Mr. Michael Mbulo, who is the program coordinator for the government of Zambia and International Fund for Agriculture Development supported Rural Financial Expansion Program, whose purpose is to increase the access to and use of sustainable financial services by poor rural men, women, and youth. Mr. Mbulo, welcome once again, and please go ahead in hopefully 8 minutes.
Thank you, Chimwemwe, and glad to be on this platform to share what RUFEP is doing. I think as introduced, RUFEP is the Rural Finance Expansion Program. It's a government of Zambia initiative supported by the International Fund for Agricultural Development, IFAD. It is a project. So my presentation is going to talk about what a project does and not what a Minister of Finance in general does. So what is RUFEP? As Chimwemwe said, RUFEP was basically established by the government of Zambia to respond to a need. The government of Zambia felt that it was important that they intervene in the area of financial inclusion. So when you talk financial inclusion, from the RUFEP perspective, we are looking at how do we encourage the access and usage of sustainable financial services, particularly in rural areas of Zambia, with a focus on the women and the youth. So the program was developed, and in terms of how we do our interventions, we are looking at intervening at 3 levels: the macro level, the meso level, as well as the micro level. Okay, sounds big words, but they're not that big. So macro, we are talking about stimulating the development of conducive policies, as well as strategies to support the development of the rural finance sector in the country. So we work with various partners at that higher level. Then meso, we are looking at supporting the development of what we call financial infrastructure. Again, to be able to build the human and institutional capacity of various institutions that are responding or operating in this sector or this space. Then we go to the micro level, which is right on the ground where demand meets supply. So we're working with the various partners that are actually providing the financial services to the sector. So these are commercial banks, these are insurance companies, these are cooperatives, these are savings groups, these are mobile network operators sending and receiving money. So those are the 3 levels at which RUFEP works. So for each of these levels, we have engaged with various partners At the macro level, obviously, we work with the government of Zambia, and we work within the National Financial Sector Development Policy, which is an overall policy that guides the development of the financial sector in the country. And through that policy, we have developed a rural finance policy and strategy, which my friend Derek from WFP was talking about. We also have a national financial education strategy, and overall the national financial inclusion strategy. So through these strategies, the government of Zambia is responding, working with the private sectors, with the NGOs, with other development partners, to be able to see what initiatives can actually be done to be able to take forward the agenda of financial inclusion. For RUFEP, we're a Rural Finance Expansion Program. And if you're going to talk about rural in Zambia, or indeed in Africa, or Asia, or South America, you cannot run away from agriculture, because the majority of our people that live in rural areas, their livelihood is around agricultural issues, not just agriculture. So agriculture as in crops and livestock, but agricultural as in other rural enterprises. You have work smiths that are producing the hose. You have the agro dealers that are providing the inputs. You have the small agents that are helping you to receive and send money. Yeah, so those are the areas, and that's how we actually do our intervention. What we want to achieve at the end of the day, we want to increase outreach. We want to have many more financial service providers working in the rural areas. So shouldn't just have NatSave having those branches in the various rural areas, but all the other financial players should be there. So we support them to be able to do that. Then we also want to improve the way they actually do their business. So looking at the issues around efficiency and effectiveness by helping them to develop products that are appropriate for those rural areas, not only products, but also delivery models or delivery mechanisms on how you can actually take these financial services to the rural areas. We are also working with promoting savings groups by helping savings groups promoters to be able to link these savings groups to the formal financial sector so that they're able to receive and access more services in the name of the various other services that banks and other financial institutions provide. So in general, briefly, that's what RUFEP is about. We have many partners that we work with at the macro level. We work with the Central Bank of Zambia to look at issues around regulation. We work with PACRA to look at issues of the collateral registry. It is possible to be able to access financial services using what we call movable property. So these are vehicles, could be your bicycle, this could be your animal. It should be registered, and you're actually able to access finance using that, unlike a traditional model of using houses or title deeds from a farm. Okay. We also work with the CCPC. In as much as we are supporting all these initiatives, you realize that there can also be issues of people being cheated, people being taken advantage of. So we work with CCPC to ensure that we are providing information to the various players in the rural areas to be able to know what is it that these financial products actually mean. Okay. Yeah, I mean, those are just examples. I think we have about 8 partners or 9 partners that we work with at the macro and meso level. Then we have many partners at the micro level, starting from commercial banks to savings group promoters, like I said. We also work with institutions that are providing solar energy. They're called solar pay-as-you-go institutions. So these provide resources of literal assets to smallholder farmers to be able to buy pumps, but also to be able to have just power. You'll be amazed that, just to be able to charge your phone, if you go a few kilometers out of Lusaka, it's not possible. So you are not able to know where to sell your products. You can't do marketing because you are cut out from communication unless you travel. Okay. So coming to issues around COVID, obviously, I think we are aware that the government is trying. They come up with the package to try and see if they can support the various players in the sector that have been affected. As we know, the demand has gone down because of restrictions in terms of movement. We also know that the people in the rural areas do their business by moving from one place to the other, going to get fish and selling to the markets. We also know that for the savings groups, the groups that we are promoting, their mode of business is by meeting. So they meet every once in a while, maybe monthly, maybe weekly, and they conduct their business sitting together and transacting. That they can do now because of restrictions around COVID. So the government has come up with a stimulus package to try and support that. But I think we are aware that the BOZ package obviously is more suited towards the formal sector. And we are discussing through the Association of Microfinance Institutions, which is one of the partners that we're working with, to encourage government, to encourage the Bank of Zambia to see how support can actually be channeled towards the microfinance institutions and other lower level institutions that are actually reaching out to the last mile, as we call it, because I think, as earlier mentioned, Chimwemwe, everybody mentioned that although we have a large percentage of agricultural finance going to agriculture, that only goes to 3-4 farmers, probably in Mukushi and somewhere in southern province in Mazabuka. But we know that the majority of the farmers that work with Dr. Kayula are the ones that are providing the food, and maybe 80-90% of those do not actually have access to finance from the commercial banks. So how do we make sure that we are able to reach out to there? That's the problem, and that's what we have to be able to head on, try and find a solution to that. So there are other development partners that are also working in the sector. I'm aware that, for example, IFAD has also come up with a stimulus package, which is available to the government of Zambia, again, to support a number of institutions that have been affected by COVID. I think the current round of the resources have been accessed by the Ministry of Livestock and Fisheries, where they are going to do disease control. Yeah. So, so I think I can stop there and, probably allow for questions.
No, thank you very much. I'm sure there will be a lot more coming your way. Last but not least, but only because Dr. Kayula came last, we will ask him to make his presentation. I'll introduce him as we load his PowerPoint presentation. So Dr. Kayula is a development profession with passion for work with smallholder farmers. He has research interest in SME growth, market-oriented agriculture, climate change, and of course, rural development. He has practical experience of SME challenges and successes. I'll let Dr. Kayula divulge the rest, but only in 8 minutes, Doctor. Thank you very much once again for coming. The stage is yours.
Thank you, Mr. Nyirenda, and thank you, Anne. Your team has done a commendable job by bringing us together. And I was thinking when my colleagues were doing presentation that this is wonderful, because the issues that have been brought out are actually many of the solutions that we have been looking for a small-scale farmer. And I'm hoping that Chimwemwe and Annie, you sit down and consolidate this and come up with a good report and recommendations way forward. Going forward, I'm representing KRI Zambia, which is actually a farmer organization. And we work with the cooperatives, farmer groups, women clubs, and youth clubs. It's a relatively new organization in the country. And so far, we have about 300, let me just say slightly above 300 cooperatives and farmer group members to the organization. Now, finance is a very big issue to the small-scale farmer. In fact, if there is anything that is making the small-scale farmers not perform very well and depend highly on programs like FISIP, because they have insufficient access to finance for them to do their production. And for me, this topic is worth discussing. And it's very, very important that at the end of it, we do what we can to ensure that the farmers are able to access finance. I know there are these various programs that have been made. And the reason why KRI actually exists is to ensure that technology is transferred from wherever it is made to the farmer, to ensure that information reaches the farmer. And we have partnered with the only agricultural television station in this country called ABN television station. And we are trying to see how we can not just concentrate on the box in this home called the TV, but also see how television can be enhanced even on the phone, a technology which already exists. And through this, we are hoping that we should be able to link the farmers to the input and output markets and also conduct certain trainings, which my colleagues have ably talked about. A lot of linkages that my colleagues have already mentioned. The finance that is available in this country actually looks to be enormous. And yet the small-scale farmer doesn't access that. They are still having a challenge. No wonder you see them crying, FISIP this year, FISIP that year, and they are not even graduating, because FISIP appears to be the only way, the major way that they're going to have the inputs on their farm and produce something for themselves and for sale. But if we took all this information, CEEC is doing a great job, World Food Program doing a great job, and all my colleagues that have talked here, it would be great. Our concern is that, you know, one of the most important avenue, in fact, two of the most important avenue that we have been promoting, one of them is not very functional, it's not working well, that is through the banks, that farmers can access loans through banks. One of them, I'm happy that there are programs that are doing a good job. Mr. Mbulo and your program, that's a very good job. There is also FSDZ, which is doing a good job here. World Food Program doing a good job. It is the savings groups. Though I would rather we just call them one name and include the savings activity just as an activity. Savings will do a great deal to help our small-scale farmer access funds, because there's a lot of money that can be put together and it can easily grow if they are supported. Then the banks, you have heard me and my team and my farmers cry that we need a bank specifically for activities like in agriculture. After the country recommended through our president that agriculture should come to the fore to rule the economy or to lead the economy, we're expecting that there should be a bank. And our call is that NATSEV, with your great job that you are doing, we want government to make you a full-fledged bank. It's not sufficient to be well positioned and to ask for a possibility for you to actually access the stimulus package. We want you to be a bank because you are very well positioned. And so far, you are one of the banks that has been helping small-scale farmers out there. Now, how do we intervene with the small-scale farmers? I want to be a little fast because we don't have time anymore. There's a model that we have given you there, which we think is a model that's very similar to what Mr. Dimboa was talking about, where the farmers below there are grouped into cooperatives, producer organizations, and they do their bulking. Actually, the intervention in that model is along the selected value chains. once the farmers are grouped in farm cooperatives or farmer groups or whatever you call them, that becomes important because the small scale farmer cannot be considered the way large scale farmers are. Only when they are brought together, and then we probably, if we want, we can treat them like one big commercial farmer so that they're able to access these loans and the like. Then these various groups can culminate into what we are calling a farmers commodity association or whatever you will call it, which feeds into a lead firm, similar to what CEEC is talking about. The lead firm provides a market such that if a bank is giving a loan to this particular group of farmers, the bank knows that these guys have a market where they're going to sell. And I know that banks will open up when they know that money is flowing and there's a point at which they can intervene to get their money back. With this system, we are hoping that probably at farmer association level, or better still at the lead firm that is processing whatever the farmers are doing, as they supply, the bank can easily link and be able to deduct their money from there. Then the banks will open up. Currently, we don't have products that are very good and tailored to the small scale farmers. There are very, very few, if any. We need products from these banks. That's why they exist after all. Not just to give treasury bills to government or respond to treasury bills, but to give loans also to SMEs and small scale farmers. The lead firm is the one which breaks out into the market to sell the product that the farmers actually produced. And if you can see, you have a look at that model, we are saying support organization, whatever support needs to be given, can be given either to the farmers at their level there or to the cooperative movement, or at the same time, they may go to the association. Other players also have a role to play. Value chain financing is required in this country. And then we are also saying, you see, one of the challenges, even if the finance could be there, are the interest rates. If you look at the questions that are coming, they are asking about the interest rates. A bank that is mostly made to ensure that they finance agriculture, we know that it will take care of that. Meaning, central bank must provide incentive to NATSEF so that they don't ask for the same amounts of payment that these banks do to central bank as the one that is financing agriculture, because agriculture is unique. It comes out on its own in the manner that we are going to implement activities. It is seasonal in most cases, although I know that we have products that can be done along the entire period of 1 month, being 1 year. We have things like livestock and vegetable production, but basically, generally speaking, agriculture is unique and it requires special financial products that fit in the agricultural sector, and those that fit the characteristics of the small-scale farmers that we are dealing with. Let me end there because I want us to have more questions so that we can respond to the questions. Thank you.
Thank you very much, Dr. Kayula. Thank you very much to all my panelists. It's been a very insightful and educative 1 hour we've had. We only have a few minutes to answer some of the specific questions, but I just wanted to bring attention to what most of our audience are asking and what Dr. Kayula has just raised, particularly to Ms. Patricia Luhanga at NATSAFE. I know you did touch on this briefly. I would like you to maybe reiterate on the issue of interest rates as well as collateral.
Thank you very much. And indeed, it's been very interesting to listen to the different views across the panelists. So interest rates, like you've said, one of the issues that we're grappling with, not just as NATSAFE, but the banking sector, as well as the country at large. Now, what even happens is the cost of money. So this is what really makes it a bit come on the higher side. sometimes we don't really get to understand the cost of money. But I'm glad Dr. Kayula did mention that if the cost of money is less or there's a waiver, then we get to see that the interest rates reduce. So in so saying, at a point when there's dedication towards agriculture financing and where we've got this cheap money coming into the banks to say this should solely be dedicated to the agri sector, then we'll see that interest rates are going to reduce. But also remember, we are regulated. So the Bank of Zambia does regulate the interest rates, and we work according to the monetary policy that is set up by the central bank. So yes, we do realize this is something that is critical. It's something, but at the end of the day, there's need to be a solution to that.
Thank you very much, Patricia. Dr. Kayula, there's a 10 billion package, stimulus package. And this is in reference to what you were just talking about. Is it sitting in the right place, and is it benefiting the people you're championing for, the small scale farmers?
No. That 10 million, actually, we have a challenge with it. And I can assure you, when we're at the end of it, when we evaluate who will have accessed it, not the small scale farmers, not the smallholder farmers. It is sitting in the wrong place. We know that banks have not been the best so far to release money to the small scale farmers because the conditionality is there. A farmer will not reach them. They will not be able to meet those conditionalities that the banks offer. So that is very good for SMEs and the large corporates, but not for a small scale farmer. We would love, and that's why we are championing that, can the government listen and ensure that NatSave, it's not that they are here, we have talked about it, NatSave becomes a full-fledged bank. And then when they become a full-fledged bank, we have conditions that are meant for a small scale farmer. In fact, when that is done, we do away with FISIP. FISIP is a waste of money. So far, this is why farmers are not able to graduate, because very little is being done. Some of the guys who are accessing the inputs are actually selling on the open market. They just move from the depot across the road, they start selling. But if FISIP was given as a loan, we go back to the past and then organize, like Mr. Dimboa was saying, our farmers in groups that are commercially minded, farmers that have been trained on savings and investment, organize them, not small political parties in forms of cooperatives that we are seeing at the moment. Real farmers, well organized, then give them this money, a stimulus package with proper, what I would call conditions, which some of those that were talked about by Mr. Mbulo, that you can even use movable assets and the like. That's what we need.
Dr. Kayula, thank you very much. If as I'm addressing the next question or bringing up the next question for CEEC, where should these funds be sitting, the stimulus package? If you can answer that in a minute, me and you can get along very well.
Is this CEEC?
I've taken it back to Dr. Kayula.
Okay.
Can you hear us, Doctor?
Yeah. Yes, I can hear you now.
Okay, I was saying, if you can answer this in less than a minute, we can get along. Where should the stimulus package be sitting if it shouldn't be sitting?
Okay, which one? Well, yes, let's take the stimulus package to CEEC, to NatSave, so that we help our farmers to access. You know why I'm saying that? Farmers actually have been able to access it through groups from CEEC. I know NatSave had the program, wonderful program, Wunjimi, and another program which they were helping the farmers, but those are not enhanced. Any good stimulus package for the farmers, let's look at institutions that are accessible to the farmers.
Thank you. Thank you very much, Dr. Kayula. CEC, your question here is coming from
I can't hear.
Helen Masia, what type of collateral or security does CEC request from a farmer to be eligible for finance? And this is from Eric Masumbu.
Okay, so for CEC, like I mentioned earlier, we have different types of products. We have microfinance, which is up to 50,000 kwacha, will not request for collateral. We also have special initiatives where if we've designed a package, such as the aquaculture, we design a package which goes up to 128,000 kwacha, or block making. When we come up with these special initiatives, usually we will not request for collateral. Otherwise, the collateral that we require mostly is landed property. We also, like I said, in rural areas, we do have a waiver where we ask for only 50% of the cover. So what tends to happen in this aspect is the other 50% will be covered for by either the infrastructure that they put up or whatever equipment they put up, will either have a lien or a debenture on that particular equipment or property.
All right, thank you very much. Another quick question for you from Peter Chiramba. You may have answered it in the Q&A session, but maybe for the interest of everyone that is listening in right now. I wish to ask CEC if they fund feed producers besides farmers. Secondly, last year, a lot of fish farmers had applied for loans. How many farmers have been given?
Okay. So yes, we do fund. That's, what was it? Stock feed?
Yes.
Yes, stock feed, depending on which value chain you're in, yes, that is also acceptable as part of the value chain. Obviously, that is considered as a value addition. In terms, so if, for example, in the aquaculture value chain, if you want to be making fish feed, that is something that we can fund because it's part of the aquaculture value chain. We fund production, we fund hatcheries, we fund feed production, we fund cold storage initiatives, the whole value chain, in short, is supported. In terms of the number of farmers that we approved for the aquaculture, we had about 878 of those, and we are currently disbursing to those farmers that we approved.
Thank you very much. If you have just tuned in, as you can see, well, there's some more people coming in. We're talking about agriculture finance in Zambia. And one aspect that we haven't touched on is insurance. And I would like Madam Patricia Luhanga to address this one from Philip Longwe. How is insurance taken care of in the NatSave financing model?
Okay, two ways. First of all, when one applies for a loan, there's a provision for the individual to request for insurance to be part of that loan. But then we've noticed that this is not mostly the most friendly approach. And that is why now we are working on bank assurance, which will have that insurance product embedded across a number of products and services that we're offering. So this is something that has not happened in NatSave in terms of bank assurance. And we're exploring avenues of how this can be done. Right now, we're looking to start our pilot program that will just be undertaken across a few products across the different segments to be able to see how this is going to work. Otherwise, if you look across, you will also notice that most of the banks are now looking into bringing up the bank assurance so that it really does help across different products, services, as well as loans that are given to customers.
Thank you very much, Patricia. Dr. Kayula, a question from Chris Daka. Is your organization helping any rabbit farmers in Zambia? And I'll ask you to keep it short, and then soon after that, our closing remarks or submissions from everyone on the panel.
the shortest is yes, we work with all manner of farmers producing all kinds of products. Thank you.
Thank you very much.
But there must be small-scale farmers, by the way.
What is your definition, by the way, of a small-scale farmer, Dr. Kayula?
Well, the definition we are following at the moment is the government one. Unfortunately, it tallies to land, that anyone having land below 5 hectares is a scale farmer. And anybody having below 20 hectares, between 5 and 20 is a medium scale farmer. That's the definition we're acquiring, although we are redesigning that definition.
You're redesigning a lot indeed, Dr. Kayula. Thank you very much. I will ask Mr. Michael Buller to just, in 30 seconds, give us his closing remarks, followed by Mr. Derek Dimboa, and we'll carry on after that in conclusion.
Okay, thank you. I think in conclusion, I just want to remind ourselves that the constraints in the agricultural finance sphere are not new. I think even before the pandemic, providing financial services to the agriculture sector has been a challenge. And I think that's why we have all these initiatives to try and get around the issues of collateral, get around the issues of information, because it is important. It is an important sector that we need to address. So there are various initiatives happening, and the issues around COVID have obviously made things difficult in terms of us being able to go out there and sensitize the communities. But I think the various institutions are doing their best. Everybody has been hit. The government would like to have stimulus packages for everybody. Yeah, but obviously the resource envelope is small. I think I'll stop it.
Thank you very much. Mr. Dimboa?
Yeah, thank you very much. In conclusion, I would like to say, I think we are better than 10 years ago. It's an evolving space, and I think we should remain positive. We are seeing a lot of, let me call them elite youths, joining the space of agriculture production. And I would urge our financing colleagues, the likes of NatSev, Zanaco, and the rest that are not even on the platform today, that they need to consider developing products for these upcoming youths. We're seeing a lot of interest. I think Dr. Kayula will mention to you that the majority of his farmers are elite farmers now. So we have got this new segment of uprising and upcoming youths around. And I think we should remain positive, like I said, and invest a lot in improving policy, positive policy, by working with government, having a constructive criticism to policy, but having solutions to that. That's the only way we could move as Zambia to the next point. I think we're getting somewhere, and I think it's an exciting space. And I urge you, Chimwemwe, to continue with this kind of program. And we hope after COVID, we could meet and have a special seminar where we could meet and explain to people and develop this into a new space. Thank you very much.
Thank you very much. In the meantime, we'll keep meeting on a virtual platform. Patricia Lohanga from NatSave, I'll give you another 30 seconds to wind it up.
Thank you very much. And we are happy that we are part of this conversation. It's been an eye-opener to us on much of the things that we need to do. And I think in closing, I just want to agree with Doc in terms of the clustering of the small-scale farmers and making them become like one commercial farmer. So there's a program we are running in terms of mechanization, where we want to have that approach, where obviously if we take a certain corridor and say Mukushi, for instance, small-scale farmers in that particular area, can we cluster them together and undertake mechanization or any other issues that they are looking for? So this is in partnership with the Saudi government. We've been in partnership looking at ways of helping the small-scale farmers across the country, and this will materialize soon. And obviously we'll get in touch with Doc and see how we can work together in terms of clusters. Thank you.
Thank you very much. Helen Masia from CEC.
Thank you. As CEC, I think we believe that the opportunities exist for value addition in the agriculture sector. And apart from the financing issue, I think other issues that we need to look into include market access, quality assurance issues. So synergies are very important, especially with most of the panel members we have had here who are working with in similar areas that we are working. Would be very interested in seeing how we can work together to ensure that we're providing a comprehensive package to our farmers apart from access to finance. Thank you.
Thank you very much. Dr. Kayola, last but not least, your 30 seconds. You may want to unmute yourself, Dr. Kayola. Please unmute yourself so that
Thank you so much. Okay, I was saying that while we're waiting for NatSafe to become a full-fledged bank, hopefully before the end of this year, we need to enhance and continue promoting savings amongst these farmer groups as a source of small loans from amongst themselves. It's very important. And lastly, I'm hoping that by the end of this discussion, Mr. Nyirenda and Annie, please bring together this information that we have discussed, and if possible, contact all of us again when you have developed a document, or now we can proceed from here so that it's not just a talk show, but it's something practical that will help this country. Thank you.
Thank you very much. In fact, this discussion here is actually a build up to meet the Farmers Virtual Summit taking place at the end of the month from the 25th to the 27th of August. We're going to encourage you to come back to that platform. And I know there's a lot that hasn't been discussed. There's a lot that was left somewhere in the drawers that you want to put on the table. Would like to encourage you to come back and be a part of that. We want to thank all of you, our panelists. We also want to thank everyone that has been tuned in. It's been a highly interactive platform because I can see a lot of our audience is still tuned in and asking a lot of questions. We are happy to share with you all the presentations that were made today. We're also going to share with you a link on YouTube that you can share with others that did not have this opportunity to be able to listen in live. So this platform is going to be available for the next coming months and years on YouTube. Ladies and gentlemen, thank you once again for your time. With that said, I would like to say keep safe and goodbye.
Thank you.
Thank you.
Thank